Let's get more with Daniel So, regional economist at Forecast. He joins us here in the Singapore studio. Good to have you with us today, Daniel. It's interesting because now everybody's starting to make bets as to when they're going to start hiking rates. I've seen some people say as soon as December, so in the final quarter of this year. What do you reckon?
I would say that the rate hike will not come in for the rest of 2009, maybe in the first quarter of 2010 because the private sector still look weak. Of course, there's this risk of the asset bubble forming, especially in the property market, but it's still very much contained in Seoul and the surrounding city. So the policymaker will be more likely to use specific measures such as the recent cut in the mortgage to market price ratio ceiling. So all this will tackle such speculative demand rather than raising high or trying to do a premature tightening when sentiment has not really recovered and the global external uncertainties still remain.
Yeah, I mean, these rebounding property prices are certainly providing a bit of a headache for the BOK. You say rather than monetary policy, tackle it more in areas such as maybe limits on mortgages, I don't know, financial regulation. But how much of a concern is this asset price bubble? I mean, what is actually driving it up so much? Is it because interest rates are so low, or is demand coming on that strong?
I would not say it's interest rate, but I would say it's the excess liquidity. Definitely, if you see that the M1 multiplier has jumped, I mean, in other words, the demand deposit to currency ratio has also jumped. So there's a lot of liquidity, but they seems to be channeled to the wrong area. They're channeling to the mortgage area because the mortgage rate has dropped to very low rate. But because of the cautious sentiment, the lending attitude to SME and even loans to SME, even housing loans, non-housing related loans are still falling for the first time in record. And SME loan has been decelerating sharply.
So it's really just liquidity driving it up.
Yes.
Okay, Adam, come in here.
Hi, Daniel. Good morning. Thank you for joining us. Let's talk about the broader economy because the stock market that is seems to be building some momentum here. On the back of recent upgrades, we've heard from a slew of international bodies. First off the line was World Bank, then the OECD. Just yesterday or the day before, I believe, the IMF also upgrading their forecast, and Goldman Sachs. Some of the numbers look absolutely stellar, upgrading their forecast for a contraction to about 2% this year for GDP and returning to growth in 2010. And all these international bodies are saying that the South Korean economy is going to be very resilient in compared to the advanced economy. Are you of that view as well?
Of course. I would say that South Korea will be one of the outperformer in Asia because of a highly competitive exchange rate. There's sort of a FX misalignment if you look at the amount of Japanese tourists and Chinese tourists that's flooding into South Korea because of the weak won, and they are actually gaining market share in US, Europe, and the won actually weakened so much against the Japanese yen, one of the major competitors. So this if the external demand returns or recover at maybe end 2009, we will see a real upside surprises in South Korea export, which will also feed through to the domestic sector. So,
sorry, Daniel, sorry to interrupt you. The one weak point, though, continues to be domestic consumption in South Korea. And today in the Korea Times, the government is now going to shift focus away from the export sector to pumping up domestic demand and investment here. And they said they didn't mention measures that it introduced, but what could their government do to boost domestic spending, do you think?
Right now they can't do much. Actually, what has been done has already been done, but they're actually rolling up a lot of specific measures and rolling a lot of funds to boost corporate investment. But all this will not pick up until the external environment settle down and until the external environment show that warrant the amount of increased capacity for the company. So right now I don't see that they can actually do much, but on the overall view, looking at the monetary condition, looking at the exchange rate, and looking at the strong communism spirit in South Korea, I would think that all these are pretty strong positive for South Korea.
Super quickly, year-end target for Korean won?
1280 will be a very hard hurdle to overcome because there's quite a number of exporters queuing and offering there, and also offshore sales, offshore players selling. But I would say that if the Dow continue to show weaknesses, we may actually hit 1,300 and above.
Thank you for joining us, Daniel So from Forecast. Hope you stay with us as well.